But let's move on to the next earnings that we have and the management that we have joining in with us. Intellect Design arena, they reported their numbers. Mixed set of numbers that came in from the company. A bit of a miss that came in on the revenue front from what the analysts were expecting. But deal wins, that was a positive sign. Good deal wins that came in from the company. Now, to understand the outlook of the company going forward, we have Arun Jain, Chairman and Managing Director at the company, joining in with us. Mr. Jain, good afternoon, and thank you so much for joining in with us. Let's just start by talking about your revenues, right? You've spoken about this also, that revenue guidance you've given is around 800 crores per quarter. This time it's somewhere around 700 crores for this quarter. Now, you have a couple of significant deal wins that have come in the month of July as well. Are you confident of achieving this 800 crores in Q2 and onwards for the rest of the year? And overall, what are you expecting in terms of deal win momentums now?
Okay. So first of all, let me clarify. We are not given 800 crore guidance. We look at it that we run the company 100 crore by each. Last quarter was 700 crore and this and above 700 crores. I think somewhere there is a communication gap. We said next milestone is 800 crore in next 3 quarters. So obviously by Q4, Q3, Q4, we should cross 800 crore. And that's how the journey has been moving. As an Intellect as a company, it's not a quarterly journey, as you mentioned, an annualized journey. Year on year, we've grown 18% on top line, which is a very, very healthy growth, and 27% on bottom line is a good growth. When we had a last quarter, which was very, very healthy, that has resulted into a large expectation from the analyst, and they projected higher number. But our consistent growth is more important for us. As we mentioned, that we designed the company for 20% growth year on year. And that's what we are looking for. It can be 15%, it can be 5%. It's in a double-digit growth, which we are looking at, and that's what we are committed to.
All right, double-digit growth. It can be 15%, it can be 20%. Let's see how that goes. Mr. Jain, I remember 800 crores was one of the numbers. You said over the next 5 quarters or so, you aspire to reach over 1,000 crores as well per quarter. So does that aspiration stand? And what about, your revenue mix? I look at your license revenue, your AMC revenue, and your implementation revenue, along with cloud SaaS revenue as well. How do each of these verticals grow over the next 3 to 4 quarters? And when you reach that 1,000 crore per quarter run rate, what would your revenue mix look like?
Yeah, so 1,000 crore run rate was, again, 3 years number, not 5 quarter number. So I think there's somewhere maybe I've communicated wrongly, but that's a number of 3 quarters. That 4,000 crore we want to achieve in 4 years with 1,000 crore PBT in the investor call also I communicated by 29. So that's the number which we are looking at. And from a perspective of the growth, our number coming from Purple Fabric is a great booster for us. We are the first business impact AI platform has been created for the world. It's there are 2 kind of data-driven lifecycle AI, which is done by a lot of AI companies in Silicon Valley, and they are application lifecycle AI, which is done by Palantir, C3, and Intellect. There are 3 companies in the world which have done it. And we have a most easy-to-use platform called Business Impact AI platform. And we are distributing this platform to our SI partners. And then we are looking this to be included in the ISVs. So it's a horizontal strategy. We launched it on June 3rd. I had a first masterclass, and we got 400 leads into this particular area. So this is a phenomenal success, which we mentioned to CNBC earlier, that it can have potential of 4 years, 1,000 crore to 5,000 crore. So I think 1,000 crore is more or less established. Now it's a question of how do we move the journey from an Indian entrepreneurship to make product, to be a great product in a global marketplace. Like DeepSeek came from China, Palantir came from US, and this could be competing against Palantir.
Okay. Well, your guidance, Mr. Jain, at least on margins, were around 21 to 25%. Correct me if I'm wrong there.
Yeah, that's right.
Are you on track to achieve that, considering that you've closed out Q1 FY26 at 20.4%, and the range for, say, Q1 to Q3, I'm not talking about Q4, was 19 to, say, 20%. Only 27.9% was probably the highest you've done in Q4. You'd have to really, buck up your margins in the next 3 quarters.
That's right. And those are the investments we made. So Purple Fabric investments are going on. So next quarter, also the investment will be there in distribution and sales. We hired significant senior leadership in last quarter, and we participated in marketing almost 25 events in 1 year. We did 50 boot camps in AI. So those investments will go up. So we are bullish on the acceptance of our platform and eMAG.ai as a platform. And margin is a 21 to 25% is what we are looking at it, and we are consistent on it.
Okay. Mr. Jain, just in terms of geography mix also, I just want to understand overall how are the deals, where are they coming in from, and which segments also, if you could specify. 45% of your revenues are from, I believe, from US, Canada, Europe. And, some of them also have the tier 1 Canadian bank, which is there, which is a win that is coming for the company in the US. So overall, how are we seeing this geography mix move, and will developed markets be the main focus area in terms of growth for the company?
Yeah, so last year when I spoke to you, we were saying eMAG.ai is a platform which is a first principle thinking based platform, simplifying the banking and helping the bank to reduce their tech cost by 20 to 30% using eMAG.ai. And that's why we focus mainly in Europe and Americas. And we got significant deal in last quarter from Europe. This year, this quarter, we got 3 deals in US, and Canada is growing healthily now. So all the 3 markets, UK, Canada, and US are going well. Europe is also doing well in Hungary, Germany, Austria. Those are the other 3 markets which we are looking at it. So with that focus, our percentage business from all Western market will be higher because it's replacing the legacy, and there's a huge legacy sitting in these markets.
Final question before we let you go, sir. It was on Purple Fabric. You did, allude to it briefly, saying that will be a growth driver for you. Could you give us some specific numbers as to where this business would be in the next 3 to 5 years on an annual run rate basis?
Yeah, exactly. That's what I'm saying, that this will be 1,000 crore to 5,000 crore range could be possible.
That's a big range, 1,000 to 5,000. Could you give us a
my potential is so high is that if we put the distribution strategy right, then it could be 5,000 crore. 1,000 crore is what we are doing with the digital experts like insurance business, wealth management business, where we are applying the direct to the financial services. But this is a horizontal platform which can be leveraged by many countries. So that's why the large potential upside is there. But 1,000 crore is embedded into the eMAG.ai.
Mr. Jain, before we let you go, we've all woken up to negative news with regards to the sector that you operate in, TCS, and the attrition or the layoffs that they're looking at. Give us a sense in terms of where you see the landscape probably changing or moving towards, say, in the next 2 to 3 years. We had some experts say that, there could be a shift in terms of the model. There could possibly be a margin crunch going forward as well.
Significantly, I mentioned earlier in an informal conversation, I don't want to mention about it, but it's not looking good. Next 2 to 3 years, Indian industry is looking bad on services side because AI is replacing significantly the new set of skills, and middle managers who are not aligned to relearn to AI are going to, and the companies which have to readjust to their business model, to the new way of delivering business outcome based throughput. So it's a big problem area which I'm seeing in the next 3 years as the overall big slide in the number of jobs in IT industry, unless somebody is focusing on business outcome based, product based delivery and systems into the world.
Okay, Mr. Jain, thank you so much for joining in with us this afternoon on CNBC-TV18 and, giving us those detailed insights in terms of what we should be expecting from the company in FY26 and a couple of years from there as well. Thank you so much for that.